Hello and welcome to Macro Decode. The precious metals, gold and silver, had a dream run in 2025 and in January this year. Currently, we are seeing high levels of volatility in the metals. To talk about the factors influencing the bullion market and give us an outlook for the medium and long term, we have with us Mr. Ajay Kedia, MD, Kedia Commodities. Welcome, sir.
Thank you so much.
When you compare the previous rallies, what is the significance of this recent rally in gold and silver?
See, in past, let it be 1980s, 1990s, or 2000, whenever gold prices gain, either there would be a single a region or maybe a one or two region. For example, like geopolitical tension in 90s, we have heard about war-like situation, and we know whenever there is a war-like situation, gold will be on positive side. Let's say 2008, when there was a financial crisis. So whenever there is a financial crisis like situation, gold will be positive.
Right.
Central bank buying. So all these factor was only one factor that has always supported. But since 2020, or we can say since COVID, there are many such incidents that in past has supported gold at one time. Take example of COVID. That was a pandemic like situation, and whenever there is a pandemic, gold should get support because economy was on standstill. Then Russia, Ukraine, even US, Iran, US, Venezuela, India, Pakistan, China, Taiwan, all these war, I think if we calculate all these type of war, after World War II, we have seen first time in this last 3 years, there are more than 5 to 6 war simultaneously going on.
Right.
Central bank purchases, and
Yes.
over and above, the supply side situation was very much critical because post COVID capex has been not been there in mining industry, and that is why supply. Take example of silver where we have deficit was consistently, and that has been picked by investors. Which investor? Financial investor. They have found there is a gap and prices should go up, and that is why family officers, financial money came in this commodity. And definitely when financial money comes in a commodity, and definitely volatility would be rising, and momentum will be created. And that is why in last 3 years, with multiple triggers and financial money coming, taking this trigger on a serious note, and investment came in commodity, and that is why we have seen parabolic gains in gold and silver prices.
In terms of the levels that we have seen in this rally, how is it different from the previous rallies?
Let's take one of the prominent commodity, which is silver, because last 1 year period we have seen silver prices gain by more than 300%.
Right.
So let's compare with 1980 and 2011, where in 1980 also we have seen prices move from $5 to $50. It was a 3 year journey from 1977 to 1980 Jan, where we have seen $50 because brother cornered silver, and from there we have seen a crash. Then it came to 2011, but the rally has started from 2006 onwards. There also we have seen slow and stagnant demand was been going on from ETFs, from investment, and everything was going fine. And it has rallied again from, let's say, $10 to $12 to almost $50, and there was a correction or crash. In 2026, we have seen this type of rally. This rally has started from 2022 September, where the prices was around, let's say, 18 $19, and there from there we have seen a rally around to $121. So why this parabolic gain is slightly different, or we can say it is not a bubble, because in 1980 the industrial demand was very negligible or near to no. In 2011 there was a structured demand was going on, but this time post COVID we have seen demand for clean energy, EVs, solar, where the pivotal role has been played by silver, and that is why we have seen industrial demand was continuously rising, and this rally was actually supported by the industrial demand. And on the other side, deficit was consistently from last phase. As per Silver Institute report, our total supply is around, let's say, 1000 to 1100 million ounce, whereas our demand has exceeded because industrial demand is around 56%. Then we have seen ETF or ETP demand from financial player. All this contributed this parabolic jump, but we can't say this is a bubble because it has been backed by investment demand and industrial demand. No doubt some speculative money was attracted from financial market to commodity market. Because of that, we have seen in last couple of months the parabolic jump, or we can say volatility was extreme. Let it be from Donald Trump's statement like adding silver as a critical metal list. In critical metal list, China banning the export of rare earth metal, that has contributed a little bit. But volatility is high, no doubt. But this whatever the gain up till now, it is not a bubble. It is a structural bull run where we have entered right now.
Okay. But in the past few days, we have witnessed high levels of volatility in the Indian market. So, what are the reasons behind this? Do you think the fundamentals are still strong for the metals?
So fundamental has started picking up from 2002 to 2022, 23, 24, and 25 also. Was everything was going fine, as we have discussed, central bank and
Mm.
deficit, demand, everything was going fine. Even critical metal list silver has been added because today's semiconductor and everywhere silver is being used. As soon as 2026 has started, we have seen momentum was rising, volatility has been rising as financial money was chasing this event.
Mhm.
Donald Trump concerns about tariff and all. Exchanges has started raising the margins.
Okay.
And previously, last year, the margins was around, it has started from 12, 13% on silver, gain up to 18%. But now margin is around 65%.
Wholesale.
To hold this leverage position or speculative position is very difficult with a 65 or 68%. I'm talking about the MCX. So what happened immediately, the leverage money was started coming out from, and that is why on 29th of Jan we have seen all of a sudden Shanghai, London, New York, India, everywhere the margin spike came, and immediately position has liquidated, and that is why there was a correction or crash like situation where silver has corrected by 45% and gold has corrected around 22%.
Right.
And that has created more volatility in the market. In last 10 days of working, we have seen fundamentals remain almost same, geopolitical tension still going on, everything has been same, only the volatility has increased because of derivative positions are now settling its open position.
Okay. So, what should investors do during such periods of high volatility?
So first of all, whenever we talk about investor, first thing is KYC. Know your trades. Like in banks, we have know your client. वैसे similarly, we can say know your trade. If you are an investor, think of long term. Don't think for couple of months or 6 months. No doubt, with the last 3 years, a very super performing year for silver and gold. I don't think it will be just same. Returns would be there, but inflation beating return, like let's say 10-12% maximum we can get. Otherwise, don't expect the return what we have seen in 2023, 24, and 25. Look for a long term. For that, you have to go with the SIP, because if suppose in next 6 months prices get like recently we have seen gold prices went down as low as 130, 135 level, and silver has corrected to the level of 225. This type of rickshaw will be witnessing in first half of 2026. So better is go with the SIP so that whenever there is a fallback like situation, you will get a more units. So continue to invest in SIP like success in gold ETF and silver ETF to the horizon of next 6 months. But if you are a opportunist, right now we don't expect risk reward ratio is not favoring gold and silver as compared to equity market. So slightly for next couple of months, be watchful in bullion, because still we are expecting some somewhat consolidation or some correction. Then that will be a good level to re-enter. Whereas for long term, continue to be holding your ETFs, keep on adding as a monthly equity base so that you will be getting a better price.
Okay. Now, tell us something about the gold silver ratio and how this will decide the trajectory of the metals going ahead. For the viewers, gold silver ratio is the number of ounces of silver needed to buy an ounce of gold. And this ratio helps us understand the potential movement of metals. So, can you tell us something about the gold silver ratio in the recent times?
So gold silver ratio is a proper barometer to gauge the economy. See, why people will buy gold when there is a uncertainty. And generally we have seen whenever there is a war like situation, pandemic like situation, generally prefer to buy gold. Silver, as of now, it's around 56% usage in economy. Whenever economy like EV, solar panel, consumption has been quite good. So whenever economy is going good, we can see investment or we can say demand for silver will be rising. to understand gold silver ratio, what you have to do, you have to divide gold prices by silver prices. You will get a ratio. Currently, this ratio is around 62. If we talk about the range in last 50 years, the ratio on an average, whenever it's closer to 80, 85, generally we see gold is more preferred as compared to silver, or in other words, gold is performing well against silver. Whenever this ratio is closer to, let's say, 40, we can see silver is more performing as compared to gold. In COVID, we have seen this ratio went as high as 126. That was first time we have seen, because of pandemic, everything was shut down to the level of 45 last month, and contributed that silver was very much underperforming with the help of critical metal list shortages and whatever the fundamental. This rally was uh, seen in silver prices. Currently, this ratio is around 61. We expect it should again normalize in the range of 70 to 73, which means gold has to go up or silver has to correct whatever the FOMO has been came in silver is now slowly and steadily reducing, and we expect gold silver ratio should go up. That means either gold should outperform silver, which means some geopolitical concerns would be there, or silver would be correcting deeply. It could be because of slow demand from industry. So either side could be going, but ratio seems to be around 70 to 72. That means now this is the time one should prefer gold over silver because of volatility, we can say, because of poor investment demand or whatever the reason.
Okay. And who's the movement of US dollar affecting the bullion prices now that, de-dollarization has been happening in several emerging markets? How this will affect the gold silver prices in the long run?
So historically, the dollar movement with bullion is inversely correlated. Whenever there is a rise in dollar, we generally see gold and silver prices comes down and vice versa. But in last couple of years, or we can say 1.5 year, we have never seen the ratio has been totally dispersed, because whenever there is a geopolitical tension, dollar will be rising and gold is also rising. That means some story is going on. With the on not a ongoing, we can say since last 5 years we have seen de-dollarization. Because of de-dollarization, what is happening? Banks, like today morning there was a breaking news that China has given an alert to financial institute that reduce your concentration in US bonds. And central banks globally is now reducing their position from US bond, and from there they have to invest. So prices demand is moving towards gold. Because of that, we have seen there is a disconnection, little bit disconnection from dollar and gold is going on, because now if there is a geopolitical tension, previously dollar was being bought, but now gold is being bought. Central banks are adding more and more gold. So I think yes, dollar index, we don't expect crash like situation in dollar. It could be getting a support at 95, 96, but with these stable numbers and everything, maybe we can see dollar index once again going towards 100, level. It will be consolidating after that last couple of years prices, dollar index was crashing. But gold is going on with a different fundamental. We can say war premiums are high, central banks are buying, ETFs are buying. So I think there is a disconnection between dollar and gold correlation, what used to be there in previous.
Okay. And what is the outlook for gold and silver for both medium and long term? So, I mean, viewers would probably want to know, is the rally over, or are we going to see more record high levels for gold and silver?
Right now, gold is $5,000. So we may see gold moving towards 5,600 to 5,900 on higher side, but correction is still on in front of us. Maybe a support to be around 3,600, 3,500. If suppose ETF money or investment money doesn't come to the market, or geopolitical tensions comes down, we can see 34, 3,500 on downside. Coming on domestic side, higher side, maybe we can see cap towards the level of 2 lakh, 2,10,000, whereas downside, maybe a support like 1,10,000 to 20,000 would be the overall range for gold. Coming on silver, we have seen a very good parabolic gains. Here, we expect in international term, 1,36,000, 136 dollar is going to be an important resistant. Or in fact, if I reduce, because slowly and steadily the volatility would be coming down. So I think 120 is acting as the important resistance, whereas support 70 and below that $54. So I am slightly bearish for silver if things have been settling down. Coming on domestic side, here rupee is going to be more important. Higher side, maybe we can see again if volatility is continue to be there, this 4 lakh or 3 lakh 80,000 maximum. Whereas downside, I think 160, 170, 1 lakh 60,000, 1 lakh 70,000 could be a prudent level where one should look for buying.
So that was really insightful about the bullion market. Thank you for joining us in the show, sir.
Thank you. Thank you so much.